Liebe Zuschauer, ganz herzlich willkommen zum Nasdaq Report hier aus der Technologiebörse am New Yorker Times Square. Mein Name ist Manuel Koch und bei mir ist Brian Barnier of Value Bridge Advisors. Thank you so much for joining us.
Glad to be here.
Brian, the earnings season is almost over. We saw the big companies already publishing their numbers. What is your opinion on that?
Well, you've seen about 400 of the 500 in the S&P 500 reports so far. The things that I'm watching are the revenue trends, the earnings trends, as well as some of the cash issues. The big thing that jumps out at me is that when you look at the earnings per share number, you see a jump up in the last couple quarters. But shockingly, the sales per share is down in this quarter so far. It's been slow before, now it's down. We're also seeing a little bit of pickup in the quick ratio, which is nice to see.
What should investors analyze in these earnings?
When we're looking at are earnings sustainable, can they go out in the future? That's the big question. One of the things that's happened over the last 2 months, and just a monster drop here in the last few weeks, are that analysts are revising downward their 12-month forward sales expectations significantly. That means, again, revenue rules. When investors are looking at these, they want to look at what's the top line opportunity that's out there. And second of all, they want to understand how are these companies getting these big earnings per share numbers? What's being manipulated because they're way out of whack with the sales numbers? From that perspective, you want to understand, are they making real business model changes that are making them more efficient that generate the earnings? Or is it reckless cost cutting that it is going to hurt them?
And many companies are cutting their costs dramatically sometimes.
When you just walk around at conferences, you hear many stories about that you're concerned about. So that makes it, for an investor, much more of a finding alpha story rather than just a diversification beta story, because you have to look for those companies that are more gems. If you dig into, for example, the Zacks database and look at those companies that are doing well on 5-year past revenue, 2-year forward revenue, and a good quick ratio, you only come up with 12 out of the Fortune 500 as of this morning.
So for investors, it's more like to pick a stock and not to invest into a whole sector maybe.
Exactly. We say buying a company rather than just picking a whatever. And that's going to become much more of a differentiating factor as we go forward here, because a lot of these broad sort of sector plays are having difficulty. For example, think about tech. Tech is all over sectors, so it's very hard to isolate it. You really need to find those companies that are leveraging it well to not just drive productivity gains, but to take those productivity funds and reinvest them back into revenue growth. And that's a real struggle, because when you look at that line of sales to the labor productivity ratio, that's not a pretty picture. So picking those companies that are doing better will be a very attractive play.
Mm-hmm. But also the expectations were a little bit higher than the last, I think, 2 quarters, right?
For the earnings, well, so the earnings expectations were a little bit different. However, we still saw that we're beating by about 70% like we always do, which is why the expectations is more of a trader kind of notion, because they want to trade on the missed expectations, the up or downside. Whereas an investor is going to want to look through that back to those bigger numbers we look for. What's the business model, the ability to generate top line, and cash flow off the bottom of that? Again, like buying a company.
The market is a little bit sleepy at the moment. We hear some news coming out of the Fed members. What is driving the markets at the moment?
So we've got a couple of things that are happening, and this is a very sleepy week. You're absolutely right. Trading volume is low, but last week we had a pile of economic data come out. The labor situation numbers, the GDP revisions that went past decades. So right now we're understanding the sort of the tapering piece that's coming on, because that's sort of the noise. So if we look at that, the monetary driving and the fundamentals, that helps provide a more clear picture for us. And what we can take away from that is preparing your portfolio for tapering. And if we think about doing that, what we want to do are pick those shares, again, an alpha notion that reduces the strain of the asset prices over the fundamentals, which means you can start your stock screen, for example, by looking at those things that have lower price to sales ratios, and then go in and do your fundamental analysis to find out where you've got opportunities.
So you think tapering is not already priced in the market?
Right now, we're seeing what I like to call Fed fracking, where it's like drilling holes in the oil and gas industry, where they're testing what's going on. The speeches and all the remarks are trying to sort of let off a little bit of bubble steam, and nobody knows quite where that is. So it's a communication going back and forth between the Feds and the market to understand how that's happening. And Chairman Bernanke is very much of a student of that. He talks about it, and so we're seeing a lot of this testing game going on.
What do you expect? When could the tapering start?
The tapering is going to be driven by a couple things. One is the real economic fundamentals, which are still rather weak. The Fed uses the word modest. So we're seeing upticks, but off of low bottoms. And the second thing is what's the risk of damage in the economy. And that's what they have to weigh meeting by meeting as these numbers are coming out. For example, the numbers we just saw about sales per share dropping, that's new. They've been gradually climbing slowly, but dropping, haven't seen that before.
But what could be possible this year, September? Many people talk about September. What do you think?
It really goes back to looking at the data piece. And they talk about that over and over again, just like the two Fed presidents we saw this past week, where you've got to look at the numbers as they come out and then make your decision. So September, that's what we're hearing. It could be as early as, or it could be later. And everybody's waiting to see what this data looks like, what the Fed dashboard looks like. And it's more than just unemployment, inflation rates.
Brian Barnier of Value Bridge Advisors. Thank you so much. I appreciate your time. Und Ihnen, liebe Zuschauer, auch vielen Dank fürs Zuschauen. Wir sehen uns in der kommenden Woche wieder hier aus der Nasdaq am New Yorker Times Square. Mehr Informationen auf www.drf.fm.